In this video, guys, we're going to look at, are your exits killing your P&L? Stick around. Hey traders, warm welcome to you. Thank you for joining me. If you haven't had a chance yet, please check out our channel sponsor. There's a link to them in the description below. But in this video, I want to talk about exits, and are exits really killing your gains? Now, I've talked before about entries and exits and how I believe that, a good entry is really super important, because without that, you're kind of just going to get stopped out. If you can't get at least the direction right, then it doesn't matter how good the exits are, you're going to get hammered after time after time after time. So it's super important to get that entry down, but it's equally important, especially when you're kind of progressing a little bit more in your trading career, to have that exit. Have the exit right, because very often I hear from traders who have this scenario. They say, Mark, I've got a great entry, but I let the thing come all the way back and stop me out. This keeps happening time after time after time. Why is it happening? And my answer to this is simply this, is that yes, your entry may be good, but, and that's great, that really means you've got a good foundation to work on, because now all you need to do is to make sure you're not asking too much of the market. Because very often, if your exits are constantly getting stopped out, you're seeing market go your favor, constantly coming back, and you're trying to push what you perceive the market should be doing onto a market that's not ready to do it. Now, of course, this is going to happen from time to time. You can't eliminate that. It happens regularly. But if it's happening all the time, if you're looking for the market to move up here, and every time you're getting stopped out and it's not getting there, it means that you are looking at the conditions incorrectly, because the market may not be in the environment where it's offering that. The market may well be in an environment where it's offering 100 pips, 50 pips, 20 pips, whatever kind of time frame you're trading. And you need to identify that by looking and saying, hey, are we in a rotational market? Are we in a trending environment? Or even if you're just literally eyeballing the chart and going, what's the distance from low to high before we've rotated? What are these chunks that we've seen? So imagine if we've seen kind of this kind of stuff here, what are the distances between these? Let's have a look. All right, well, that one's 50, that one's 60, that one's 70. Then if you're suddenly looking for a 200 pip move, well, history has shown you that's not likely to happen. You need to kind of go, right, well, okay, let's be sensible here. I would love 200 pips. Of course I would. I'd love 800, I'd love 1,000. But the market's not going to give me 1,000 unless I'm prepared to sit through a lot of stuff. So if I still want my 500 pips, 200 pips, whatever we had, I know that I'm going to have a stop much wider, because the type of the market conditions we're in. We're moving up in what did I put on that? Say 70. Moving up 70 pips, moving up 50 pips. It makes no sense for me to be buying this and having a stop, a low stop, because I'm looking for a bigger move. The market's moving in waves, But if I don't want to make my stop wider, then I need to reduce my target. It's where the exit comes in, guys. Why exit can be killing your P&L. Because if you're constantly looking for this 200 pip target, whatever it may be, and you're constantly missing it, you're out of tune with the market. The market's only offering 70, 80 pips per pulse. If you're late to it, you really can't expect more than 50 pips. So really, I guess the scale's out of sync here a little bit, but you get the point. Maybe your 50 pips is probably going to be more like here. There's your 50 pips. Then that's the trade you should be looking to make until conditions change. So when you have an exit that's constantly, I know we should run our winners, and everyone says that, and that's the right and the correct thing to do in the right conditions. Many times, guys, the markets aren't in the conditions to run winners, and you can't force your will onto the market. That's what I see many people doing with their exits, saying, listen, I want this out of it. Yeah, but the market isn't giving you that. You can't demand something from the market it's not going to give. Yes, you might have some news comes out that suddenly rips it up there, but look, you're trying to trade in sync with the current environment. That's our job. That's what we're trying to do. And so when you come in and say, I demand 200 pips from this intraday move, the market is not going to give it to you. It's been giving 70 pip rotations each day over the week, or whatever time frame you're looking at. So where do you want to have your target? Well, you want to make sure your target is, literally up to that point. And many people, demanding this, and the exit is just killing their P&L because they've got a great trade. And in reality, if they just kind of adjust the parameters to match what's going on in the market, they'd have probably taken the 200 because they'd have had 4 200s out of it, 450s out of it, sorry, to make them 200. And they could have been where they wanted, and they could have been, taking money. And then when the market comes into more extended conditions and you're getting those extended moves, then by all means, scrap that 50 pip target and look for your 200 pips. Pick your point and wait for it. And then you adjust your exit dynamically. Whereas your entry might still be very similar. And this is the point we made in a video, I think last month, has been uploaded. I talked about, the entry is fine and it's good, but and that's the important thing, because ultimately we can adjust the exit dynamically, but sometimes the exit's killing us because we're wanting too much out of the market. Now, some people might say, okay, well, let's flip it on its head, and if we're coming out too early, how's that affecting the market? Well, you know what? It's not going to kill you if you do it all the time. You don't want to make a habit of it, because ultimately it means you're going to have to be right more, because obviously a couple of stop outs is going to undo much more of a bad trade than letting it go in your direction, or the good trade is going in your direction, should I say. So it makes a lot of sense to try to extend it, but it's not going to kill you as much as always looking for stuff and letting it stopping you out. Because ultimately, guys, when it comes down to the bottom line, losing money is what wipes us out, not making money. And I know in a perfect world, we want to stretch our profits, we want to make sure we're making good money on the winners, make sure we're extending those. But it's still okay to be scalping stuff and grabbing bits out of the market. As everyone tells you, it's not the end of the world. Yes, it's not perfect because you leave yourself vulnerable to getting stopped out or getting a few stops in a row and doing the work. Fine, we all agree on that. But ultimately, it's nowhere near as bad as losing money consistently. So let's think about that. When you've got your exits, if you're one of these guys who, is just getting your P&L decimated because your exit's too far, you're taking it so literally, you've got to run my profit. Just have a look and see what the market's giving people. Just have a look and see, eyeball the chart, see exactly what the rotation sizes are, see how big the moves are, work it out for yourself and go, am I being unrealistic here? Because yes, everyone would like that, but how long am I looking for the trade? 3-day move. How big has a 3-day move been before? Oh, maximum 300 pips. Right, well, how many rotations am I getting before that? Well, exactly. You start to kind of dig down and reverse engineer, if you like, the actual rotations and the movement of the market to fit in with your trade. All right, guys. Let me know your thoughts on that in the comment section below. Interesting one. Don't think there's a right or wrong answer to exits. I think it's quite an interesting topic, and a lot of people got different opinions on that. But I definitely do believe that many people try to look for those extended exits. And I've done it myself, guys. I tried to force it, take it so literally. I'll run my profits years ago, run my profits. And you get stopped out. And you get super frustrated. It's like, well, I'm wasting good entries here. Why don't I just align myself with the market a bit more? Take a bit off the market, take a bit. And when conditions change, then look to extend it. If I see the data that shows me every single trade, or 2 out of 5 trades, is going another 50 pips, well, now I need to start to look at things and adjust things. But, being aligned with the market is very crucial. Take care, keep your risk management, whatever you do. Bye-bye.